Mike Benton. I'm going to let Mike introduce himself. We're going to be talking about mortgage rates and lending today because it is a very hot topic. So, Mike, why don't you go ahead and give us your intro?
Well, thanks for having me on. I appreciate it. Mike Benton, I'm a mortgage loan originator and division vice president for Benton Capital Mortgage Lending, 7 offices, with our main office being here in Colorado. And, been in the business since 2004. So I've seen the good times, the bad times, and now the current times, post COVID and, during COVID. So it's been an exciting 12 months and happy to be on.
So, hey, I think for my clients, my buyers especially, what they're really asking me is, what's happening with mortgage rates? Where are we at right now and where are we going in the next, 6, 12 months?
I think that's a hot topic for everyone right now. I think as we talked about previously, I think that's a big reason why there's so much activity is rates are still at historically low levels. Right now, our conventional, interest rates are running in between 2.9 and 3.25, depending on the day. Today, as I mentioned, is a little bit, they're up a little bit. And that's not to no surprise with the unemployment numbers that came out this morning that are down to pre-COVID levels. So that will continue to push rates up. So my gut feel and, the guys that are much smarter than I am are all forecasting rates to be in the higher 3s by the end of the year, if not low 4s, depending on, how this summer goes with activity.
And that really affects purchasability, what people can afford overall.
Oh, absolutely. Yeah, purchasing power. I mean, it's going to come into play as well. I mean, one thing that is coming down kind of the pipe right now with Fannie Mae and Freddie Mac. Earlier in the year, they put in what's called a lender price adjustments for investment properties and for second homes, meaning the cost for a rate is much higher than it was previous, therefore discouraging those types of buyers. Still, rates are below 4 for those buyers, but there's the cost to that rate is higher for all of us as lenders and as borrowers, right? If we have a cost, we're going to pass it on, and vice versa. If we absorb the cost, then we give it back to the borrower. The next thing that they're putting into play right now to kind of slow things down is there was a QM patch put into place a few years ago that they're removing, which means that Fannie Mae and Freddie Mac are trying to lower, basically the ratios that people will qualify for. So come sometime in July, and we don't have an exact date yet, what'll happen is, before we could get somebody approved potentially with a back end ratio of 50%, 49%, they may be moving that down to 43. That with an increase in rates will definitely, limit the number of people that will be able to qualify, right? I mean, so time is of the essence, in my opinion, and just educating people like you're doing right now is important. So you're providing a great kind of public service announcement for them right now.
Yes, thank you.
Yeah.
Can you talk to us a little bit about inflation and how the inflation of home prices affects, the current prices now and in the future for our buyers?
Absolutely. I think to put it in the easiest terms right now that people will kind of be able to follow, which is the cost of, so as I mentioned to you earlier, the cost of lumber, right? The cost of lumber has increased. I don't have today's date, but I mean, I think it's 250 to 300%. I think there's different kind of numbers thrown around, but it's significant just in the past year, along with other raw materials. And, I've heard rumors not rumors, I've heard like real realtors tell me, hey, these smaller builders are being put out of business because they can't afford even to be able to build. So what happens there is it's supply and demand, therefore limiting, the number of houses on the market that we're in right now, therefore producing these buyer frenzies. That's pushing things up. So you got the cost of raw materials up, cost of homes up, interest rates down. I don't know if you guys have recognized, but when you go to the grocery store or you go out to dinner, the bill's 10, 20, 30% higher than it was a year or 2 years ago. So when people feel like they're overpaying for a house today, in my opinion, I don't think that's necessarily true, because if they just look at the cost today to reproduce that house, they're probably more than likely 9 times out of 10 going to be under the basically the production cost of it if they were to rebuild that house today.
Hmm. Yeah, that makes sense. We've seen that too, especially here in Colorado with a lot of new builds going up. Um, you know, 2 years ago when we moved here, you could buy a new build for 400,000, and this year it's more like 750. And
Yeah,
it's exactly that. It's the inflation of everything, right? Cost of living, but cement, lumber, tile, and people are struggling to find somewhere to live right now, and they can't even build new homes for
right.
the cost.
Yeah, so I mean, I think that's where, you know, when someone feels like they're overpaying, as we discussed, it's not necessarily if they're in it for the long term, meaning, 2+ years they're going to live in the home. I think they're going to be pleasantly surprised with how, the market continues to steadily increase or stabilize, therefore protecting them from having to go out and, look for a rental and pay astronomical amounts of rent.
Right.
When the statistic is, you have a 95% higher net worth if you're a homeowner versus if you're renting. And, you're just throwing money down the drain versus putting money in principal each month when you own a home.
Yeah, paying yourself back ultimately.
Absolutely.
So the other, big news story right now is the eviction moratorium that the CDC had in place, which recently was ruled that CDC can't really put something like that in place, which is an odd thing because it's been in place for a little over a year now, and President Biden actually extended it to the end of June, and the courts said no, we're gonna cancel this as of June 30th. That's it. How does that affect buyers in general and investors, most specifically landlords and property owners right now that are renting their properties?
I think in addition, yeah, well, and I'll answer that question too. But in addition to that, the forbearance, they've
Yeah.
been kicking that can down the road as well. Forbearance, for those of people that don't know what forbearance is, it's allowing you to basically miss mortgage payments, and either you have to make them up in a lump sum, or what they're doing and what they did in the past is they'll add it onto the back of the loan. They'll extend the loan term. So if you're in a 30-year mortgage, maybe they'll make it a 40-year mortgage, uh, which, a lot of realtors and investors have said, hey, like once these things come back, maybe we'll see a big influx of inventory. I don't see that happening because I see two things happening, which is one, them kicking it down the road again, the can down the road, potentially. And secondly, I see most lenders and banks either working out a payment plan and not making them come up with a lump sum 3 6 months plus their current payment. I see them adding it onto the back of the loan because the way we make money is being able to keep the servicing rights and not put people into foreclosure and things like that. In regards to the landlords, for me, I haven't heard too much rumblings on what that looks like, so it's kind of probably harder for me to comment on how the landlords and investors are handling it here in Colorado.
Yeah. Yeah, it's been interesting. I know that there's been some support, some financial support for investors that have renters or tenants that are unable to pay the mortgage for them, basically. And so with that potentially coming to an end, but it could be an issue. I haven't heard too much about that either, but as you were saying earlier, they can continue to keep pushing, kicking the can down the road, and like,
Right.
we'll see where we get by the end of the year. But I just think it's a really interesting conversation, with job, when we started the conversation with the unemployment rates. I mean, they're back to pre-COVID times, and it's a very interesting balance, right? Of
Oh yeah. Well,
mortgage.
I don't know about you, but I mean, every time I'm driving down the road, it's help wanted, help wanted, help wanted, help wanted, and it's that balance of people getting off the unemployment checks, and a lot of states have started to say, hey, we're going to cut it off. But I mean, McDonald's, paying people to even come in for an interview. I mean, much less like to bring them on. And we're in unusual times. And I think that, the more we can educate people and allow them to make great decisions, I think that's important to us, and making sure they know what what their short-term and long-term goals are, giving them the proper information, and then letting them make the best decision for their family, whether it's for a primary house, second, or investment property. But just in any times, as you know, real estate is a great hedge against inflation. And I don't see much of a massive pullback long term, me personally. We're writing great loans. People are very well qualified. And most loans that we're writing have significant down payments as well.
Yeah. Yeah. I've seen that as well. Yeah. Well, awesome, Mike. Tell us how we can get in contact with you, because you're an amazing partner in the industry for me as a realtor, and I'm sure for my buyers as well. I've heard nothing but great things.
Oh, I appreciate that. Yeah, I mean, our website's Benton Cap, so BentonCap.com. And my telephone number is 719-331-5443.
Awesome. And you work out of Colorado, you have Texas, California. Am I missing?
Yes. Yeah. So we're licensed in 38 states. My branch personally is licensed in 16 states, and definitely all the West Coast states: California, Washington, Oregon, Texas, Colorado, Arizona, Wyoming soon, Utah soon. So we're plus all the big ones: Florida, Virginia, North Carolina, South Carolina, those
Yep.
states as well on the East Coast.
So anyone out there, Mike's your guy. I'm telling you what. All right, Mike. Well,
Thanks, Gary.
appreciate your time. Thanks so much. And we'll be talking to you real soon.
Thanks for having me.
All right. Thanks, Mike.